What's happening, guys? Welcome back to another Sunday Scan. I hope that everyone had a great holiday weekend with your families. We had Thanksgiving on Thursday. We had a short market day on Friday, early close at 1 p.m., but we still had a little bit of action. And then we had the weekend after that. So we had a super exciting launch of the Legends Playbook on Black Friday. It's been a massive hit so far. So thank you for everyone who's gotten it. And for anyone who's still considering it, definitely lock that in. It's at reduced prices for right now, but that will go up after the holiday is done. And then we are running a final last call for Cyber Monday. So some of the Black Friday deals are carrying over into Cyber Monday, but those will end at midnight on Monday. So if you haven't gotten any IU bundles or the Legends Playbook or anything yet, you have a little bit more time, but that is ending quickly. So definitely check out the Cyber Monday deals that are linked below in the description and then also in the comments. And I hope that you check out all the deals. We have some things that we have never run before. And so definitely some rare opportunities to lock in IU bundles, and the Legends Playbook before that all ends. So let's get right into Scan for the Week. I will give the disclaimer that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm going to go over is for educational and informational purposes only. Now let's get right into some market review and then some main watches for the week ahead. So the first thing that really comes to mind for this week is that we have broken out of the downtrend that we were in SPX and QQQ and a lot of the other things. So some of the variables that had us kind of in this downtrend, and that is, a trend is just a series of higher lows or higher highs or higher highs and higher lows in one direction. So we were in a downtrend where you had some lower highs, lower lows, lower highs, lower lows, and now you kind of had that normalized action. Now we are breaking out of that. So we are invalidating this trend and we are entering a new trend. So that's just one simple way to kind of keep you on track. If we were to have a big green day here and then flush back down, that we're still in that downtrend. But once we start to break out of that, this is not normal action for this trend. So we go in with the assumption that we are in a new market trend. And honestly, a lot of momentum names have come down 30, 40, 50, 60%. And so you've had a massive flush out in a lot of the recent runners. Look at things like NBIS and things across that space, even things like MSTR. These are massively, oversold and unwound at this point, even things like SMR as well. So, we've had a small market correction in the overall market, but because so few of the names actually hold up the whole index, things like Google and NVIDIA and everything else, unless those things are getting decimated, the market actually holds up pretty well. But anyway, so we're breaking out of that downtrend now. And you can also see the VIX, it really took a dive. And so when the VIX is selling off, that means that people do not expect a ton of volatility over the next couple of weeks or into the month. And I think a big portion of why this correction is kind of done is, one, we had a lot of the froth come out of the momentum names, but then also you had some Fed speakers come up and say that, yeah, actually there are problems with the labor market and we're going to most likely do a rate cut in December. So that was kind of one of the things, along with the frothy market. And then, there was some back and forth on the rate cuts in December. That was kind of what caused the correction. So once those factors reversed, I think we're in a new trend now. So a couple names that I want to review are this KZIA. So this was on watch from last week as a liquidity trap, and it ended up playing out pretty nicely. I just kind of want to go over that setup one more time for anyone who's not familiar, because we do this setup a frequent amount and it works super well. So big update. Ton of volume associated with that, and then just some consolidation. And it's a little bit tricky to time. When are these going to go? Sometimes it's 2 days, sometimes it's 4 days, 5 days. But something that helps me is you have different phases. You have the initial spike that gets everyone interested, and then you basically have the consolidation period. Within that consolidation period, you can almost have a right side of a V, concept play out here. So what I mean by that is that even though this is a very subtle, long drawn out process, you can see that this is like one trend here, and then you have another trend kind of form from here. So you can see just slowly trending down, kind of stabilizes, slowly trends back up. So, something that can be helpful with liquidity traps and positioning into them is to identify where in the consolidation are you, because you usually don't want to try a liquidity trap too soon because you can just get caught, in this downtrend. So, what I like to do is look for that right side of like the very wide V here, and that is when I can look to start to position in against these lows, and then as it starts to build and gets up to that average cost that the shorts are most likely in, that's where it can actually trigger and you can get a nice move. So that's just a little bit of a tip for getting some good entries on liquidity traps. And a lot of times you're better off adding in partial here, seeing if it plays out, seeing if it reclaims, and then adding, as you're anticipating that triggering. Because if you're adding all at once, down here, maybe it flushes down there and you get stopped out or something and you miss the whole move. So kind of putting on partial and then adding into that as it's working, getting more confirmation is usually a good strategy for that. Financials have held up pretty well during this market correction, but you can see that definitely they are reclaiming some nice trends as well here. And then you have some big runners like Google that were on watch for relative strength last week. I actually tried some puts on Google that did not work. Sometime in the middle of the week, I think on Wednesday, because it had run up so much earlier on in the week. So even though it was on watch for a relative strength, it ran up so much that I thought it got a little bit overextended, and I thought we might have some options on one, but it really just kind of chopped around and stabilized. So those puts didn't work, but Google was a nice name on watch for relative strength. And into the upcoming week, I think it'll also be a name on watch for some continuation. But you also have some new sectors emerging, and we're going to go over those in a little bit. One thing I did want to touch on is this NVIDIA is still staying pretty weak. So we talked about, trends and channels. This is still clearly in a downtrend. And I think that, after its big earnings announcement, and you had some other things like Google is doing some different chips. And so is, like Meta and other places, they're going to other sources besides NVIDIA. And I think, one of the main things for that is that NVIDIA has the chip that's good for everything, but some other places can make some chips that are good for specific uses. And so if you have some, more targeted chip buying as opposed to people getting like the catch-all chips, I think that's part of the reason why NVIDIA is unwinding a little bit, and some of the other names like Google have been a little bit more bid than normal. So that was just a concept I wanted to go over, that this is still on a downtrend. So even though the market is recovering, you have some old leaders that are rotating out and some new leaders that are rotating in. A couple other things you can see. Names like MU, ASML, there's other things that are bouncing pretty hard, and there are names that are not bouncing well at all. So NBIS, this is still struggling a little bit. It's slightly breaking out of that down channel, but NBIS and CoreWeave are still pretty weak overall. So those are not like market leaders out of this correction. These are more like market laggers. So that's something to be aware of versus some other names that are not correlated to AI, like Walmart. You can actually see that this has been forming a really nice base that it's been breaking out of, and a couple of retail names are actually doing the same. So some new leaders like Walmart, maybe some Dow names are actually leading the pack now, and those are worth paying attention to. So Walmart will be on watch for relative strength over the next week, and you can see very normalized action here, but as we start to break out, we could actually start to speed up and get some parabolic action, in my opinion. And you actually have some other retail names like KSS. They recently had earnings and had a massive move up there. So I think something interesting that could happen with KSS is I actually think that this could have some continuation to the upside. If you remember, we had like a meme squeeze on it, I think during the summer. Big spike up and immediate rejection down. And I think a lot of people are anticipating that same thing. But you have a different kind of catalyst now where you actually had some pretty good earnings, and it can almost be like a turnaround story to some degree. So just because this gapped up, it's holding pretty well. And I think you could get some continuation higher and maybe even some squeezes before you actually have some good mean reversion trades on it. So more of a long bias on KSS while it's trending up here before it gets really, really overextended. Some other names like BE is actually recovering decently well. Still not, I wouldn't say leading the market higher, but after that massive capitulation, which we had some nice trades on that, this is more going back to a normalized baseline. And I think that this is way, way more strong than something like SMR, which is also in the AI power sector, but this is nuclear, and BE is more fuel cell. So you can definitely see what is holding up and what is starting to recover versus what is just lagging. So BE is on watch for continuation. It broke 100 on Friday. And I think we could be getting back into the 120s or 130s if the market is strong, and then possibly even to back to highs or higher through the end of the year, again, if the market holds up pretty well. LITE, this is going to be a massive name on watch for a mean reversion trade. But before that, I don't have a short bias on it yet. When I eventually do trade this, I will trade it with puts most likely. But really, I want to go over a couple things here. So this is in the photonics sector. This is like just like SNDK was a niche sector with like memory, and that was like over the last couple of weeks, and then that had a big mean reversion. LITE and a couple other names were in the photonics sector, and that is really a hot theme right now, and definitely market strength and market leaders, and market leading. So what I like to do when you have these names, in order to not get chopped up waiting for that mean reversion and to possibly join long too, is just have some general trend lines of understanding what is the normal trend here, what is the normalized action. And you can see if you were to draw a line from here, kind of through here, this is like one trend. And then within that, you kind of have this trend, from here, it's starting to speed up. And so when you have trends within trends start to speed up, they tend to eventually mean revert back down to a more normal baseline. But we're just getting to the point now where this is actually getting starting to get overextended from the trend. So maybe we get 350, 375, even 400 is possible, in my opinion, before we have a big mean reversion, maybe at the end of the week or so. But the higher the better this goes would be great. And even using like weak opens could possibly be some good long opportunities before it really starts to get super overextended compared to its other trend. And then I would flip my bias to mean reversion on that. EQT, so some natural gas prices were surging, and this is very similar again to like Walmart, where it's just a slow builder and it's starting to break out of this big base. So we could have some nice parabolic action in the weeks ahead if we have some natural gas prices continue to spike there. And then speaking of commodities, really the big one is silver. So silver is up 6% on Friday, and if you were to look out and zoom out for like an all-time high chart on silver, this is really breaking all-time highs now, and this is over multi-decades. So even though this looks like, yes, it's been straight up, when you have things that are breaking out after multi-decade, periods, it can go a lot further than you think. So more of a long bias on silver and the associated silver names like AG, PAAS, and some others. And again, the reason why these are anchored to it is because this is a silver miner. This is a silver and precious metal streaming company. And so when the price of silver or gold spikes, the margins and the cash flow on these all spike. So it's not just a technical pattern. It's also a fundamental reason why these are moving up as well. So as long as silver is trending higher, I expect a lot of these names to really trend with that. And then when you have silver get super overextended, and then look, maybe for a mean reversion, these names will also be on watch for mean reversion, but not yet. This is a fresh breakout. This is a big move in the works. So those will definitely be on watch for higher. And then kind of a sleeper name. So this PPBT, this was running maybe a few months ago or a month ago, and this had a massive volume day, 450 million volume or something like that. And then it really just consolidated. And you could see, just like I was talking about with KZIA, regardless of the time frame, even though this has come down, this has been consolidating for a month, you could see kind of that front side or that left side of the V, and then the right side of the V starting to form. So now we're after the consolidation, we're starting to perk up some higher lows, and now maybe some positioning in against some of these areas on the lows, and that they start to base above here. That is when I could really see it having a massive squeeze out. So not a classic liquidity trap because it's been so long, but it has variations of that. And sometimes when you have super long consolidation periods, maybe it's some like a fund or something like that loaded up here, cleaned up the chart, and then as it starts to tick back up, maybe they have a secondary move. So this is on watch for a nice breakout over the upcoming week. And I think that positioning in towards these lows is a decent strategy and way to do that. And then as it's starting to trigger, then you can actually add into that. And then a few other names with crypto. Wolf and CLSK have demonstrated relative strength on the recovery. So you can see how much this recovered from 11 or so back up to 16, as opposed to something like MSTR, which is just down in the dumps still. And I really think that the issue with Bitcoin right now is that it's around MSTR. I think MSTR is leading kind of some of the Bitcoin moves because, again, if MSTR was the biggest buyer of Bitcoin over the last year or so, and now it's getting close to their average or it's somewhere around there, MSTR can't buy like they were before. And so you have a massive layer of Bitcoin demand demand basically subsiding for now until it's maybe starts to naturally trend up or until something else happens. But I think MSTR is really what is holding back Bitcoin at this time. And so I don't exactly know how that all plays out, but I think it's a little bit of a drag right now. So until you see MSTR performing a little bit better, I think that's what it will take for Bitcoin to start to do a little bit better, at least in the near term. So those are most of the names that I want to cover on Scan this week. Just a quick scan, hopefully get everyone prepared for the week ahead. And then really we have our Cyber Monday sales that are going to be going on from the release of the Sunday Scan at 6 p.m. on Sunday until midnight on Monday. And so really, really consider joining IU. Look at the bundles, look at all the products, look at the Legends Playbook, which is just a fantastic resource. And especially, if someone has been looking for setups that work, that are actually proven, there's so many different patterns and setups that kind of work. Sometimes they do, sometimes they don't. All of the setups in the Legends Playbook are battle tested from people who have made millions of dollars using them. So, some people say that, okay, you could learn some of these strategies, maybe a quick version somewhere online or something like that, but it's not quite the same because you're not getting the nuances of the people who trade them. And the nuances are really what makes the difference between something that works and something that doesn't. Even something like a liquidity trap setup, you can go over that in about a minute of like how to, conceptually understand it, but until you get all the nuances to really make it work, it's not as an effective pattern as it would be if it were explained properly. And so, having people like Lance or Stockby or Jack Kellogg or, Phil Gettiker, like all these people just going over in great detail the massive nuances that they use for all these setups that could be the difference between those setups working and not working. It is worth your while. So definitely check those out. And I hope that everyone has a great week ahead. We will see you in Investors Underground.